Well, good morning, everyone. Thomas Montgomery here. It is a beautiful Wednesday morning. Today is March 4th, 2026. We get together most weekday mornings at this time, 8 o'clock Central, to review the grant we received, the SPE, the Special Purpose Entity Model. And most importantly, we're here to answer questions and support each of you, whether you're a current participant in the grant or possibly just considering it. So I have my screen shared. It is spefunding.com. This is a very important resource site if you're looking to better understand how this legal, ethical, but very non-traditional model works. This is where you're going to probably want to go. In these morning Zooms, we can give you a high level overview, but I don't know that we can do it justice. Really, it's coming over here to spefunding.com and getting more familiar with it in a very diligent fashion. So at the top of the website, it has an introduction, and so we'll go ahead and start with that. What is an SPE? What is a special purpose entity? A special purpose entity, SPE, is a legal entity created for a specific purpose, often to isolate financial risk and manage assets. It's often used for funding. So, what this means is that when clients use an SPE to raise capital for their business, the SPE is a separate and distinct corporate entity. It is the one that's borrowing the money, and then that money can be transferred legally and ethically to the client's other business or businesses for other uses. The end result is the SPE carries the debt, carries the risk, and then the money that's transferred to the grant participants' other businesses has free and clear use of that money. So, simple example, let's say you want real estate. So, if you went and bought real estate normally, there would be a lien against that real estate. If you use the SPE model, the SPE entity borrows the money. Then the money is transferred typically to the client's other company. The other company buys the real estate. Now the real estate is owned free and clear, and then the debt stays over with the SPE. And that can be used for business acquisitions or just general working capital. But that's the concept there. Now, the way that we've assembled this through a grant is it's actually very results oriented. We, in fact, guarantee in writing a minimum of 250,000 within 30 days. And it's designed to have no out-of-pocket cost. So I want to spend most time talking about this. So when we say no out-of-pocket cost, that does not mean that it's a free program. It is not a free program. Couldn't do it if it was a free program. It's not a free program. However, the cost is designed to be paid out of financing, out of funding. And we have really guaranteed financing to make sure that it can be financed. But you and I know, you and I have been around. So different types of financing have different terms and different repayment conditions. And so people want to know, well, what's the interest rate? I don't know. We're going to have to apply, see what you get approved for, and then each participant can decide to accept or reject the offers that's made. So factual, 250,000 guaranteed. You'll see that in writing. That's true. It is designed to be no out-of-pocket cost. That's true. Doesn't mean it's free, just means the cost of participation is designed to be paid out of financing. Which financing will it be? Depends on the individual applicant. Couple training videos here. There's a training video here, one about company cars that we recently added. If you're watching a recorded version of this right now, this is how you would join us for the daily live Zooms. The meat and the potatoes of the website's here at the bottom of the page. 3 steps to SPE funding. So we're really big on financial literacy. We're very big on transparency. A lot of times people they'll want to call in and they'll want us to tell them everything they need to know about this fairly complicated model in a brief conversation. That's unreasonable. And we don't even want to attempt to say that, because what we don't want is a client to come back a day, a week, a month later and say, well, no one told me that, because we don't want surprises. People hate surprises. So the way that it's set up, there's a three-step process, which it says three steps. It's on the honor system. So if you don't want to do the three steps, I guess you don't have to. But step one includes training to get everyone a good basic understanding. Step two are three more trainings for more advanced knowledge. And then the end goal would be to have an educated prospect so then they could make a decision. Does this make sense for them? I think it typically will. And then over on step three, they can click here and it will pop up the participation form. Now, if you are one of our distribution partners, you'll have your own link to drive people to, so you get credit for it. But in general, it's going to look the same. It's just going to be a different link. So the packet starts with a one-page flyer that summarizes the proposition, you know, pretty much on track with the website, but it's still worth reviewing. Talks about the deliverables, and we have a training that goes through and describes this. That's one of the trainings. I think it was this training here, in fact. But what it does clarify is the cost. It's not a free program. It was never intended to be a free program. And in fact, it costs $25,000, but paid out of financing. And you can see that it's broken into two steps. There's a deposit that needs to be paid for us to get the SPE set up, because what we're doing is we're creating a unique corporate entity that it's set up in such a way, it's set up as a management consulting firm, as an expansion business, so it's easy for us to get approval. But the first step is the deposit. Do you have to pay anything out of pocket? No, it's designed to be paid out of financing. What will those financing terms be? Don't know, because on page two, you'll fill out the app. If you have a current business information, put it in. If not, leave it blank. Bottom information is business owner. We have about 40 different lenders, 40 different lenders, no hard inquiries to give people financing for these two steps. So the cumulative cost paid out of financing is 25,000. The guaranteed capital raise, which is stated below, is 250,000. So if you're better at math than I am, you know you're going to be paying 10% of the capital raise for the program. And you can make an educated decision. Is that worth it? So if you could get a $250,000 loan guaranteed, and there's other benefits as well, but just looking at simply from that, and the outlay will be paid out of financing, not paid up front, not paid out of pocket, 25,000, 10%. Is that a good deal for you? If so, participate. If not, don't. What we really focused on recently, including yesterday's training, is talking about how the SPE isn't just a vehicle, an entity to get a loan. It also generates cash flow. And that's part of the requirements to get approved for a loan, is to show the three C's. One of the three C's is capacity. So we built that in. So for the people that stop and understand, especially watch the training, it's great, because we're literally paying for the loan back. So if you're a participant and you're going to get a $250,000 loan, that's a loan from a bank. But we actually provide the cash flow to pay the loan payments. So you come out net even. You get the 250,000 loan, but we're paying for the payments. But to understand that, definitely you want to go through the trainings, because it's not too good to be true. And I think it's only too good to be true if you don't take the time to understand it. But it's legitimate, it's credible, but it's more complicated. Now, if you have someone that says, just no, I just want a loan, I just need funding, I don't want complicated, then the question always becomes, do you have a fundable business? And most people don't, therefore they don't get approved. What we're providing is a fundable business. The SPE is transferring a fundable business to them. That's why it works. At the bottom of step three, we've revised this. We explain that there are two ways that an individual can be a distribution partner. At no cost, they can become an affiliate. And there's a link here to become an affiliate. It doesn't cost anything. You get a a link and you refer people in, and just like affiliate programs, you get paid. Or we have our more advanced program, which is called our branch office, and we just did a training on that yesterday. And the link to that training has now been added right here. So, do you have to be a distribution partner to use the model for a capital raise? Absolutely not. Can you be a distribution partner and not do a capital raise? Of course. A lot of people choose to do both. Doesn't matter. So I want to turn the rest of the time over to you. We have 632 of you on at the moment. What questions, what concerns do you have? Now, if the questions are very narrowly about your specific file, or if you're a referral partner, a specific file of your client, this isn't where we want to talk about confidential information. That's where you'd want to pick up the phone and call our office. But from the model, from either being a participant and raising capital or being a distribution partner and getting paid to help people, what do you need to know? That's our primary purpose of these morning sessions. Because again, I can give you an overview, but if you really want to understand it, it does require a bit of commitment of time because it is an advanced model. Who has questions, comments, concerns? All right, Edward's asking about time frame, and that's good because what are the typical questions that people would ask? Well, what does it cost? Well, we covered that. The total cost is 25,000, but it's not paid out of pocket, it's paid out of financing, and it's broken into two pieces. So we've covered that. And then the second question we often get is how long does it take? So let's get to that. And that was Edward's question. So, from the time that an individual pays the deposit, which we provide financing for, they don't have to pay it out of pocket. We normally need 7 days to put together the deliverables here to get the feasibility study done. You might say, why is that important? Well, we have a training that'll teach you about the relevance of the feasibility, which is here. But the bottom line is we need 7 days to put this together. And then at that point, then we're ready to move forward into kind of the bread and the butter. The bread and butter is us delivering the three C's because that's what it takes to get funded. And it talks about it here at the top and in the trainings. So the three C's, of course, are credit, collateral, capacity. Credit can be divided into business credit. We add trade lines, which you see right here. So we have a strong business credit profile. Those trade lines can include company cars, like we just got and we trained you on right here. From a personal credit perspective, we don't worry about that. If personal credit's not a strong suit of yours, then we provide a cosigner for the large loan. So that's not a problem. From a collateral perspective, we provide that because that's something that lenders look for. We provide that, and that's delineated here. And then the third C is capacity. That's really the secret sauce that makes this work. We need to be able to demonstrate to the lender that we have enough cash flow coming through that we can afford to pay the loan back, and that is built in. So uh, the timeline to get the three C's together, which is Edward's question, under the license fee is about 30 days, and then we're normally able to apply for the large financing after that. So you're looking at a week here, 30 days here. So I guess that would be 37 days, wouldn't it? All right, KE's asking about the branch office. So, yes, so we added the new training about a branch office, and I think it's a pretty thorough training. But if you have any specific questions, KE, this is a great place to ask them. But yes, there's continued training and support if you decide to run a branch office, but definitely recommend watching this. Now, even if you're not looking for capital yourself, it's still good to go through these trainings if you're thinking about being an affiliate or branch office, because this does describe what we're providing for clients. But with that being said, real easy to become an affiliate, real easy to learn more about becoming a branch office. Anyone can become an affiliate. We do some screenings on the branch office. So not everyone can run a branch office. Anyone can become an affiliate. Thank you, KE, for that. Christian states when it comes to funding options about lines of credit, yes. So let's pull this back up and we talk about the deliverables. And so it'll state that we guarantee the 250,000 of guaranteed income in the first month. So that's earned income. That's considered capacity. That's not a loan. It doesn't have to be paid back. But the first bullet is what Christian's asking about the 250,000. And his question really is, could it be a term loan, lines of credit, or some combinations? And yes, we can work with you on how you want those instruments to look. So absolutely. Normally it's a term loan, but if you have more unique needs, we can work with you on that. That's the beauty is you're never relinquishing control. You're never giving us a power of attorney to go commit you to loans that you may not want or you don't like. That's never going to happen. All right. With that being said, if there's no other questions, then I think we know what we need to do, right? If you're someone that's looking for funding to start or grow a business, the SPE model might not be, but might be the right structure to help you do that. What we strongly recommend is coming over and getting yourself familiar with how it works. And if it sounds like the right fit, then go ahead and participate. You click here, it'll bring this up, flyer, and then the one-page app. No hard inquiries, so don't have to worry about that. No minimum credit scores. We have financing regardless of personal credit. Top half, fill out if applicable. If not, you can leave all or parts of it blank. Bottom half we need, which is the key person, the business owner, someone that's going to own 20% or more. If instead you're looking at getting paid to help other people, same website, training still relevant, but then we get down here and you have two options. You can either become an affiliate or run a branch office, and that information is there. All right. Well, we'll be back tomorrow morning. Bring your questions. Our primary goal for these morning sessions are to answer your questions. Really, after you've done your diligence, your due diligence is to come over here and go through the training material so you have an in-depth understanding. You all, many of you are very smart and experienced, but this model is different. It's very good. It's legal, it's ethical, but it's very different. And if you don't take the time to understand it, I don't think you'll understand it. I don't think you can just infer how it works. So please watch the training. I think it'll make sense. Then you can go ahead and get funding if you want. And also you can become a distribution partner if you prefer to. All right. Thanks, everyone. We'll see you back tomorrow morning. Same time, same place. Bring your questions. Thanks. Bye.